Before I get into the video, first I want to congratulate everyone. We have finally made it to new highs. I've remained bullish almost every single video. We've continued to remain bullish no matter what people were saying, no matter what the bears were throwing at us. We remained vigilant. But now it's time to be cautious. Before I get into that, like, subscribe, comment your thoughts below. Let's get into the video. Now, when we're looking at the ES, aka the SPY, what are we looking at? We are looking at a rising wedge pattern. Now, what does that mean? Does that mean the market is immediately going to drop from here? Does that mean that a huge correction is coming? The bull run is over? No, it doesn't mean that. And by all means, I'm actually still bullish here. But we have to be cautious. I've said in other videos that once we get above 430 on the Qs, the triple Qs, we have to start being cautious. Now, here are two moves that I'm looking at heading into tomorrow. Where one, which is the more likely move in my opinion, we see somewhat of a dip heading into tomorrow towards 49.80. We see that retest and then we head higher. Okay. That's the more likely move that I am looking at. Another move that we could be looking at is that we potentially just break out higher, have a false breakout, and then we break back down into this rising wedge pattern. So keep in mind that the first option is more likely, in my opinion. What have we continued to see in the market? We've continued to see bears get trapped over and over. So this is why the first scenario is more likely, in my opinion. Even today, we've seen the same thing happen. I even seen it in my Discord where traders got excited and thought, the bull run was over. They got into bearish positions, they got into puts, and they immediately got trapped. We've seen it Tuesday, we've seen it Monday, we've seen it for weeks now where bears continue to get trapped. So keep the scenario in mind. That is the scenario I'm looking at as far as the ES goes. Now, can we just head straight down from here? By all means, we could. So that is why I have to reiterate to be cautious. Now, another reason why I think that the bull run is not over quite yet is that we still have more room on the Qs. Okay, as you guys can see, we still have more rooms on the Qs. And if we're correlating the first move on the Qs with the ES, we see that we have a gap at around 427, 426 range. We can come down here, retest it real quick, and head higher towards 440. Again, my price target is still 440 on the Qs, and my price target on NQ is 18K, probably a little bit higher than that. So, still bullish. But again, be cautious between tomorrow and Friday. I would say if we get a break and hold above 432 heading into tomorrow, then look for a move towards 434, then 436, 438, and 440. As you can see, those numbers are very, very close because me personally, I'm going to head into the rest of this week, the week very cautious as we get closer to 440. Now, again, we do have news in the morning, and I believe we have news on Friday morning. So I am expecting some type of retest below 430. If we don't get it, that's completely fine. That's all. That's really fine to me. But if we do get it, again, expect it to be a potential bear trap. All right. So be cautious on both sides. If you decide to be bullish, be cautious above 430. If you decide to be bearish, be cautious below 430. Okay. If we start dropping, once we start breaking key levels, that's when I will become bearish. I've said this plenty of times. If we break below 422 is when I will start to be concerned as far as a bearish move on the Qs. But until these key levels get broken, I still remain bullish overall. If we're looking at the Dow Jones, and we go to our daily chart on the Dow Jones, same thing. Again, be cautious here. As you guys can see, we are at the top of this daily trend. And as you guys can see, I'm not like other YouTubers. I make sure my trends actually connect. I don't make stuff up and have them in the middle of Narnia. Connection here, 1, 2, and then 3. And right now, we are at the top of this trend. So again, be cautious. If you want to look at the ES again, and if you want to copy it, connection, connect, connect, all across the board. Be cautious. Again, that's what I'm looking at as far as the overall market right now. This video wasn't meant to be long. I'm not going to go into too much as far as other stocks and things. This is more so to just put these scenarios in your head. That way you don't get nostalgic. Even if we're looking at the IWM. Another reason why I believe a potential dip could be coming is the IWM. What have we been seeing on the IWM? we've continued to see the IWM just slowly climb up. And it's trying to, like, I guess, keep up with the market because the market is continuing to move up. But overall, we haven't seen anything significant from the IWM. So that leads me to believe that one or two things are going to happen. Either the IWM is going to drop towards 185, which I've been saying in other videos. I'm actually bearish on this thing. Or we're going to see some type of rotation happen into small caps when the market drops, and then the IWM has higher. If I'm going to be bullish on IWM, I'm looking at a move above 200. But for now, I expect a move towards 185, and we're in 190 puts heading into February 16th in the Discord. If you want access to my signals in the Discord, link is in the description below. We do stocks, crypto, Forex, all that fun stuff, so check it out. But right now, again, I think the IWM is kind of signaling that a potential drop could be coming. So keep that in mind as well. I could be wrong. I could be wrong and it just be a simple rotation. Who knows? But that is what I'm looking at as far as the IWM. Now we have to keep in mind that February is notoriously a bearish month in the market. And I have reason to believe that towards the middle slash end of February heading into March that we could see a correction coming. So this is why I keep drilling it in to be careful with going all in on calls. This is the perfect time for traders to start getting nostalgic and getting happy and FOMOing, and they're just start yelling to the moon and they think the market just does not drop. Okay. I just want to make sure you guys understand that this is not the time to start FOMOing again or being super nostalgic, and we have to trade with a clear mind. All right. So that is what I'm looking at. Not a long video. I just want to bring this issue to you guys' attention. It's not really an issue or anything, but just bring it to your attention. And that's all I really got. If you want to draw patterns like this, or if you want to start getting better at drawing trend lines, maybe supply and demand zones, support resistance, Chart Prime is the indicator for you. They got some of the best indicators in the game. Check out the link in the description below. But other than that, that's all I have. Until next time, have a good one, traders.